Secretary. Look, I was there when the Secretary and the Chairman of the Federal Reserve came those days and talked with members of Congress about what was going on. It was about September 15th. Here's the facts, and we don't even talk about these things. On Thursday at about 11 o'clock in the morning, the Federal Reserve noticed a tremendous drawdown of money market accounts in the United States to the tune of $550 billion was being drawn out in a matter of an hour or two. The Treasury opened up its window to help. They pumped $105 billion in the system and quickly realized that they could not stem the tide. We were having an electronic run on the banks. They decided to close the operation, close down the money accounts, and announce a guarantee of $250,000 per account so there wouldn't be further panic out there. And that's what actually happened. If they had not done that, their estimation was that by 2 o'clock that afternoon, $5.5 trillion would have been drawn out of the money market system of the United States, would have collapsed the entire economy of the United States, and within 24 hours the world economy would have collapsed. Now, we talked at that time about what would happen if that happened. It would have been the end of our economic system and our political system as we know it. And that's why, when they made the point, we've got to act and do things quickly, we did. Now, Secretary Paulson said, let's buy out these subprime mortgages. That's what he came to Congress. But he said, give us latitude and large authority to do many things as we decide necessary, and give us $700 billion to do that. Shortly after we enacted our bill with those very broad powers, the UK came out and said, no, we don't have enough money to buy toxic assets. Instead, we're going to put our money into banks so that their equity grows and they're not bankrupt. And so the UK started that process, and that's true. It was much cheaper to put more money in banks as equity investments than to start buying their bad assets, because it became early determined that we'd probably have to spend $3 or $4 trillion of taxpayers' money to buy these bad assets. And we only had $700 billion. So Paulson made a complete switch, went in and started putting money in buying securities and reinvesting in the banks of the United States. Why? Because if you don't have a banking system, you don't have an economy. And although we did that, it wasn't enough money, and as fast as we did that, the economy has been falling. And the reason last week, we're really no better off today than we were 3 months ago, because we've had a decrease in the equity positions of banks because other assets are going sour by the moment.